the best month for the market since November 2020, the time when Joe Biden won the election and people thought and extrapolated the fact that there would be continued government spending and stimulus, I would say you were crazy, because there was absolutely nothing that occurred in this month that should propel the market to have, or at least the Dow rather, to have its best month since November 2020. This is a month that has featured near record core inflation. Core inflation at its highest since not April, not May, not June, but since the 1980s. That implies that we've been seeing continued increases in the Fed's preferred gauge of inflation, core inflation. Core inflation. It's no surprise then that last Thursday, Kashkari said there was no progress on inflation. Yet somehow we're now approaching new highs for this stretch here that we've had that is not very long, but is still shorter than some of the bear market rallies we've had in the past. I don't know when it's going to end, but my assumption is that the market makes new lows. And I have reasons to believe this that go beyond just addressing the fact that people are saying, oh, the market's oversold, whatever the heck that means. I have no idea what they mean by that. Or that cash levels are very high. Well, interest rates are going up. Cash levels should be very high. These types of things that people, just making decisions based on sentiment. We're not doing that. We're forecasting actual factors that drive businesses and drive the market. What is the next thing that we're looking at? Well, we've been in a very accommodative environment that has allowed zombie companies to emerge and run, and they've been able to do so because they've been able to get financing. They've been able to raise funds and operate without cash flow. This is going to change. It has already started to change. We've seen a massive decline in IPOs this year. That's not just because of a market decline. That's because of a general appetite to move to different types of assets. When interest rates go up, bonds become more attractive. Cash can then be lent out and generate a return. That's why we see growth stocks, the most ambitious, highest potential, et cetera, stocks take a disproportionately large hit when interest rates go up. We've seen this effect play out in stock prices, but just wait until these companies start running out of cash. They haven't started doing that. They can't raise the kind of cash they could in 2020 or 2021 when cash was free, when interest rates were very low, the 10-year was below 1%. There's going to be a wave of bankruptcies that we're not seeing yet. A wave of bankruptcies. When was the last time you heard of a bankruptcy? I haven't heard of a bankruptcy in a very long time because there hasn't been bankruptcies. Everyone's been getting money. Everyone's been getting loans. It's been no problem. Interest rates are not peaked yet. So we're just hitting new highs. We're just continuing to hit new highs in interest rates, but we're not at the high. We're not at the peak. We're approaching what the Fed is saying might be the first stopping point. But they have continued to move the goalpost. So if there's any place to question Fed credibility, it's on, are they hawkish enough? Have they gotten hawkish enough? Okay? 4.5% interest rates, gonna cause bankruptcies next year. That's a big wave that's coming that hasn't occurred. 5% interest rates, gonna lead to even more of that. Let's take a look at this month. We've seen European financial crises, shortest ever British prime minister in history. Fed saying no progress on inflation, and somehow we're having the best month since November in the Dow. Jeff Bezos saying economic recession looking likely. This is not some random Wall Street analyst who's right 58% of the time. This is Jeff Bezos, who is the founder of Amazon and needs absolutely no introduction. He clearly has a lot of information. The Fed, who says inflation has, they've done no progress on inflation, has a lot of information. I cannot underemphasize the fact that Kashkari on Thursday of last week said that no progress has been made on inflation enough. I can't emphasize that enough. The Fed, there's multiple pieces to this. The Fed is raising interest rates to see inflation come down. They've raised interest rates and they haven't seen inflation come down. We just had the highest core inflation of this entire sequence. They also want to see inflation come down, not just for 1 month. They can't just see the October CPI, core inflation indices, ratings, whatever you want to call it, numbers, come down like 0.1, 0.2, 0.3, okay? They need several consecutive months of decline, of unequivocal decline. Why does this matter? Here's why. We thought, I believe it was the June CPI, something like that, that meant peak inflation. Everything was going to be good from here. We got a better than expected inflation. We had Joe Biden saying no inflation. Remember that? Look at that now, okay? The market's hit new lows. What do you think about, we'll talk about Nikola in a sec. If you go, we got a question for anybody who didn't see that, is not on the live. We got a question asking about Nikola. I'm just going to address this real quick because he's on the live. There's going to be a wave of bankruptcies next year. As we discussed earlier in this video, feel free, once we post it, to go back and watch. Companies have been able to run without cash flows because it's been super easy to get capital. They can sell stock, they can borrow money, interest rates are low, liquidity was plentiful. Liquidity is now drying up a lot. It's going to continue to dry up. And interest rates are going to continue to go up. So it's going to be hard to get liquidity. Companies that are not producing cash flow are incredibly vulnerable because nobody wants to give them money. Nikola is one of those companies. If they can somehow produce the trucks and make the money, yeah, they'll be able to survive. But it's my assumption that hydrogen is a very difficult technology to get to work. I don't really know a lot of hydrogen stations out there where they can pitch truck owners who need a reliable source of fuel in order to be profitable to adopt this technology. My opinion would be stay away, dump the shares. It's possible it goes up, but I think you'll have a better opportunity to buy it in several months from now. I hope that answered your question. Feel free to drop a follow-up if you've got more questions. You can also rewatch the video. We address these kinds of companies. The Fed. Inflation simply hasn't peaked in the eyes of the Fed. They want to see several months of consecutive decline. We're lucky if we get a 75 basis point, 175, and then they start slowing and then they pause. Right now, I'm not seeing any indication that they pause. Rivian's a little bit of a different story than Nikola. I would say Rivian is, in my opinion, as a stock buyer, expensive. It has pulled forward, even after this decline, it has pulled forward a lot of its future potential gains. But I like it as a business better than Nikola. They've got deals with Amazon. We know Amazon's going to buy a ton of those trucks simply because it's profitable for them. For Amazon, their fuel costs are way more than their monthly payment if they're financing their car. So the biggest consideration for them is bringing that fuel cost down. So to answer your question, I like Rivian as a business, but for the same reason we talked about how future bankruptcies are coming about and how I'm not a huge fan of Nikola, I think you can get a better opportunity in a couple months. Things will eventually return to their intrinsic value. When people start seeing waves of bankruptcies, they start seeing companies are going bankrupt, they're going to look at their portfolios and they're going to look at what companies are in danger of bankruptcy, and they're going to have to price that risk. Right now, I don't hear a whole lot of talk about bankruptcies coming. That's not a hot topic right now, but they're coming. This is not going to end tomorrow. The Fed's not going to cut tomorrow. If everything went well, if inflation had already peaked, and that was the last CPI core inflation indices reading that we got, if that was the peak, expect the Fed to need to see a couple more months of clearly identifiable, unquestionable peak inflation, and then the Fed can pause and hold rates higher than where they are today for roughly a year. It's not going to be a good environment for companies that are not producing cash flow. End of story. Now, the question is the Fed even seeing peak inflation right now? I mean, they just said on Thursday, no signs of inflation coming down. Well, we'll leave that in the hands of oil prices. And we're seeing some flirtation of a possible resolution with Russia, Ukraine. We're seeing Macron say peace is possible if the Ukrainians decide it. Apparently, there's some Democrats who said they want to engage in some diplomacy. We'll see about that. Nancy Pelosi also today said it's bipartisan, providing additional aid to Ukraine. So, not saying Russia has everything to do with the price of oil. What I'm saying is there's a possible catalyst that might provide some relief, but ultimately, I think oil prices go up. We're seeing OPEC cut production, et cetera, et cetera, et cetera. So, thank you, but but yes, the prices have come down. They have come down, and the economy is strong for now. No question about that. That is going to provide the Fed runway and ability to raise interest rates, and they have said so. So we should expect interest rates to go up. I would urge you to differentiate between prices being attractive and prices having come down dramatically. There's a big difference. Prices can come down dramatically and still not be attractive. They can still not be appropriately priced enough. Rivian, I don't know its valuation off the top of my head. You can feel free to comment if you happen to know Rivian's market cap. I'm just going to assume it's $10 billion. I remember it got as high as 60. That was clearly too high. Maybe it's at 10 billion. It's important to know that this is a very small, very young company producing very little cash flow. There are only 2 car companies in the United States who have never declared bankruptcy. 25 billion for Rivian, so even more. There are only 2 companies in the history of the United States that have never declared bankruptcy. That's Tesla and Ford. Ford almost did in the Great Recession, 2008, etc. GM did in the Great Recession. $25 billion is half the price of GM and half the price of Ford. Ford owns a stake in Rivian. So Ford's valuation includes their stake in Rivian, or hypothetically, in theory, should. Rivian, very small company, not nearly as mature as Ford or GM, selling a very expensive car, which maybe a high-end consumer will hold up in a possible coming recession, but maybe not. My opinion on that, on Rivian, is $25 billion is too much. Just as too much, in my opinion, way too much. It's half a Ford, half a GM. I don't know the numbers off the top of my head. My assumption is Ford probably produces $15 billion in cash. Oh, that is a good point. That's a good piece of information right there. That is a ton of cash. That is a ton of cash. $10 billion minus cash, I mean, still a good amount in my opinion. $15 billion will provide them cushion, will prevent them from falling below that. So here's what I'll tell you. Rivian's potential downside, we'll call it 30% potentially from here. I mean, I think it's without the cash, maybe $1 billion company, maybe a $2 billion company. It's just it's how you got to price it. You know, it's a car company, typically a lower margin business. Obviously, Tesla is flipping on its head a little bit, but it's very competitive. This is not a dominant new product. This is a company that has a great customer in Amazon. Not trying to take that away from them. But it's a very difficult business. I mean, 25 billion. Again, Ford, GM, you look at those market caps, you look at the size of those businesses. Not saying Rivian isn't going to be successful. I'm not saying you shouldn't buy it here, although that would be my decision. All I'm trying to say is there's going to be a difficult environment coming up. I think there's going to be more bankruptcies coming. Sounds like Rivian is going to be able to weather it. Yes, Tesla did have the same story, And look, they proved the haters wrong. It's possible Rivian does the same. It's possible Rivian does the same. Would I buy here? No. Just to address what you said, look, I'm a Tesla fan. I am a Tesla fan. I happen to make a lot of money this year shorting Tesla. I'm not saying that you should short Rivian. I do think it's an expensive stock. I don't know how else to slice it. That's just my opinion. When comparing, for example, AT&T and 8 multiple with 7% dividend or whatever it is, and Rivian, which won't really return cash to shareholders for a long time. Yes, they have $15 billion in cash, but they've also got $10 billion in pulling forward valuation. I would personally pick AT&T, at least to put my dollars in, especially because I expect rates to continue to go up, and Rivian's valuation to possibly come down a little bit. Now, 20% was a lot different than what it could have been. When it was at $60 billion, even if they had that $15 billion in cash, that's a $45 billion cashless valuation you're giving them. That's very different than $10 billion. I'll grant you that 100%. That is a huge thing. But my simple opinion is it's too expensive. I can be wrong. I'm wrong all the time. It happens. That's the way of the land. But it's expensive. I'm staying away. I would personally rather have that cash. I'll be like Rivian, just have that cash and see if this market turns around. Let's wait for the next Fed meeting, in my opinion. What stock do you see as a good deal these days? Well, kind of the opposite of Rivian. I'll give you one of my favorite names, one of my largest positions. BTU, Peabody Energy. It's a coal producer. Coal demand has never been higher than it is right now. A lot of people say, and fear, rightfully so, coal is going to be replaced by renewables. And it will at some point be replaced by renewables. But right now, both India and China are investing in new coal plants. They want coal. They will be buying coal. They're buying all the coal they can. Europe is buying all the coal they can. And this stock, it can't get out of its way. It's just having a weird trading thing going on. Earnings are dropping any day now. They haven't announced a date that's going to happen. Somebody said they released earnings. The stock got halted last week. That was fake. They did not release earnings yet. I think they're going to have good earnings. If they don't have good earnings this quarter, I expect it in the quarters to come. Why? Well, in the COVID crash, when ESG was booming, investors urged this company to sell out and hedge all of its future pricing. So a lot of the coal it's mining right now is being sold at predetermined prices. Those hedges are coming off early next year. Once those hedges come off and we have record coal demand, because let's not forget, Nord Stream 2 was bombed. There's no natural gas coming into Europe, and Europe has the capability to consume coal. And I don't know if their coal consumption is at records. I know general coal consumption is at records, but my assumption is Europe's coal consumption is at records right now. So, Santa Claus gives coal to the naughty people, but this stock is incredibly cheap, in my opinion. It has a dividend, and I'm a big holder of it. It's been delivering this year, as have the oil companies have been delivering for us, and I view them in very similar buckets. But coal is kind of this niche play, and BTU, I think, is the best pick for it if you're looking for a stock that can produce over the next 6 to 12 months. So that's my stock pick today, BTU. You're interested in auto EVs? It's a good space. My opinion, I like auto EVs. I will get into that space when I can. BTU, yes, it's a coal company. I would not be afraid to buy GM or Ford here. They're pretty well priced. Huge EV exposure. They're cheap. They pay a dividend. And I think the stock can grow in value. And at the very least, they'll pay you a dividend to wait. Or maybe not GM right now. It's going to come back. The dividends for both these stocks are going to come back. They're going to engage in buybacks because the stocks are cheap. They're only twice as expensive as Rivian. And they're so much more mature as a company. So if you want to get EV exposure, Rivian offers some interesting potential to the mind, but GM and Ford offer fundamentals and EV exposure. So that would be my decision on that. That's all I got for today. Unless another question comes in the next couple seconds. I appreciate you coming to the live and talking. If Feel free to come anytime. That's today's video, and until next time,